Welcome, everyone, and thank you for joining us for today's webinar, How Modernizing AP Can Help Businesses Gain Back Time, Money, and Control in Turbulent Times, brought to you by IOFM and sponsored by Turbulent. We do have a few housekeeping notes to go over before we officially get started. If you have any technical questions or issues using the WebEx platform, please use the chat box and I will respond right away. If you have any issues with the audio, please click the phone icon located above the chat window to receive the teleconference information. Please do make sure your speakers are on and check your internet connection. But if you do continue to have audio issues, please click that phone icon to get the teleconference information. For those that do need to call in to ensure call quality, everyone's lines have been muted. If you happen to get disconnected, you can log on again using the instructions provided in your webinar confirmation email. But if you continue to experience difficulty, please email webinars@iofm.com and we will respond right away. We encourage you to ask questions throughout the webinar. Please type your questions into the chat box and hit send to submit them. And at the end of the webinar, we will have our presenters answer questions. We will also have 4 polling questions during this webinar. A pop-up box will appear when we run each poll. Please choose from the multiple choice answers and hit submit. We would love your participation and insight today. Finally, this webinar will be recorded and you'll receive a thank you email with the on-demand materials within 3 business days. And this will include a PDF of the presentation today, as well as the recording of the live webinar. So again, please look for that in your inbox within the next 3 business days. And now I'd like to briefly introduce our speakers for today. We have Marc Brousseau. Over the past 26 years, Marc Brousseau has established himself as a thought leader on accounts payable, accounts receivable, payments, and document automation. A popular speaker at industry conferences and on webinars and podcasts, Brousseau advises prominent end users and solutions and services providers on how to use automation to improve document and payments-driven business processes. Brousseau has chaired numerous educational conferences and has served on several industry committees and boards. He resides in Center City, Philadelphia, with his wife and 3 sons. We also have Derek Cheng. Derek Cheng is the Senior Director of Corporate Marketing at Turbulent, the leader in global payables automation. He leads the development of content and is the co-host of the Business Finance Friends podcast. He's authored multiple white papers and articles in the areas of finance operations and is an avid technologist for back office processes spanning a career over 25 years. So at this time, I would like to welcome our speakers and hand the presentation off to Marc.
Thank you so much, Laura, and thank you all for joining us today. There is no question that it has been a tough year for businesses. But for many businesses, the biggest test may actually lie ahead: how to return to growth in a really challenging economic environment. This is the time for rethink the way your business operates. And one area that businesses should take a hard look at is their accounts payable function. The way a business pays its suppliers can play a big role in helping the business survive and thrive in the toughest of economies. But to do that, you've got to find ways to ensure that work from home productivity is maintained. You have to apply smart cash flow controls. You have to modernize your processes. And of course, you have to mitigate your risks. If you take a fresh approach to paying suppliers, you can make all of this happen and not only achieve short-term benefits, but set your organization up for long-term success. Today's webinar is going to show you how to do that. But before we get started, we wanted to begin with a poll question, which is about to be displayed in your screen. We want to know, which of the following is your biggest accounts payable challenge? Is it disruption to established business processes and procedures? Is it long cycle times? Is it a lack of visibility into cash and corporate spend? Is it inadequate employee accountability and oversight in this new normal? Or is it concerns about compliance and fraud risks? Take a moment to respond to the poll question now displayed on your screen. We're going to discuss the results in just a moment. So, Derek, when you're talking to prospects, what are they telling you is their biggest challenge they face in this new reality for accounts payable?
Well, thanks, Mark. Everybody is still very sensitive, obviously, to spend, particularly now as things become more tight around certain industries. So that's always going to be an issue going forward. And certainly there's a lot of control issues that companies are having. Control equals visibility equals efficiency. And so I think a lot of companies right now are struggling with those concepts.
You know, when we talk about spend analytics and we talk about controls, it's probably tempting for some accounts payable leaders to say, you know what, this is somebody else's problem. This should happen at the ERP. Maybe IT should ensure that these things are happening, or maybe the finance leader should ensure. But the reality, Derek, is that AP really has an outsized influence on how their organization can manage these types of things, no?
Definitely. And I think you have to look at it from the point of where the money leaves the building, so to speak. And, you know, at that point, where is the control? Where can you develop that capability to really manage that money that's leaving that building? And, you know, AP is that point down to where you write a check or submit a wire transfer. You know, that's all encompassing in AP, and it goes beyond invoices in a lot of ways.
Yeah, and proving once again, Derek, that you have your thumb firmly on the pulse of this industry. We asked our attendees which of the following is their biggest challenge in accounts payable. 41% of the folks on the line said it's that disruption to established policies and procedures. And 20% said it's inadequate employee accountability and oversight. That's control. 11% of attendees identified longer cycle times or lack of visibility, or even concerns about compliance and fraud risks. Are you able to ever achieve that optimal control in an environment where you're semi-automated or paper-based, Derek?
I can't imagine doing that, especially right now. Or let's say you are a finance organization and you're still hiring. Congratulations, but also how do you ensure that those new onboarded employees that are part of your finance team are going to be, I don't want to say it this way, but how do you trust them? How do you trust them to do the right thing? How do you trust them from a standpoint of control and compliance and auditability? So yeah, it all plays back into having the right tools for accounts payable to execute effectively even while remote.
It's fair to say the change comes slowly to accounts payable, and yet everything has seemed to change in accounts payable in 2020. The pandemic has resulted in new ways of working. 91% of accounts payable practitioners are working remotely, and there's no telling when or even if they will be returning to the office. AP practitioners also are working longer hours these days. In fact, 8% of AP practitioners are working an additional 2 hours per day. And to me, that's really saying something when you consider that most AP pros were already working long hours before the pandemic. And longer working days can largely be attributed to trying to keep up with the new risks and new operational challenges that have been created by the pandemic. 1/4 of AP leaders say they're concerned about fraud and compliance issues created by the way they're doing things in this new normal. And let's face it, the new normal has disrupted established processes and procedures. In some cases, you folks have been forced to choose between circumventing checks and balances and getting suppliers paid. Some businesses are relying on email to onboard suppliers and route invoices to purchasers for approval. And it's no surprise that the FBI, the IRS, Interpol, they've all reported a huge spike in phishing schemes and business email compromise attacks. Let's face it, fraudsters couldn't let a good crisis go to waste. But that's not your only challenge you face in this new reality. AP leaders must also contend with more calls and more emails from suppliers regarding the status of invoices. Suppliers have cash flow issues too. Studies show that it costs an average of $3.60 to respond to a single call or email from a supplier regarding the status of an invoice or a payment. Now, I know, $3.60 doesn't sound like a whole lot of money, but when you multiply it by all the calls and emails your company receives from its suppliers each month, well, now it adds up fast. And worse, in today's remote work environment, it's hard for many companies to chase down the information they need to respond to all those inquiries from suppliers. 1 in 5 businesses, they're concerned about missing an invoice due date because of operational disruptions caused by the pandemic. And there's no question that it's hard to adapt manual and semi-automated processes to this remote work environment we're in. And 6% of businesses are concerned that their current AP processes don't provide the visibility their senior management needs to manage their cash and spend in these tough economic times. I imagine that issue is going to become bigger in the quarters ahead as businesses struggle to return to growth. All told, 19% of businesses are concerned about their current processes for paying suppliers. 7% of you say you're overwhelmed by it all. But businesses also are facing new economic pressures in their AP departments. 62% of businesses have experienced lower revenues because of COVID-19. 2/3 of businesses, they expect to reduce their spending in response. But that's going to be easier said than done, because for 1/4 of you, the pandemic and these disrupted operations are making it harder for your business to manage its overall spend. And the thing is we weren't doing such a hot job of it in the first place. So now things are going to become even more daunting. And size is further complicating matters for many of you on the line. The challenge of paying suppliers only becomes bigger as you become bigger. Complicated global and M&A business structures, well, they're the norm today. And there's plenty of companies out there with international divisions and acquisitions and subsidiaries and brands and entities and shared services centers. And many of these organizations, well, they've got disparate AP processes that you've got to manage, like company structure pictured in this slide. So what does your processes look like then? Well, they look like a nightmare. When you've got multiple entities with different systems to integrate and complex processes to try and navigate and manage, well, now things are really overwhelming for organizations. Just think about the time and the effort just to do PO matching and invoice processing for each of these entities pictured here. Long before you even get to making a payment, you're struggling to collect and validate and track banking information and tax forms for all the suppliers at each of these entities. Think about all the resources required to make payments in local currency, logging into those multiple bank portals and managing all those banking relationships and paying all those banking fees. Think of all the payments that have to be reconciled and all those spreadsheets to do it at the entity level, and then again at the headquarters level. And many of you don't even have complete integration across all these different units and all these different systems. So now you're left to keying all this data. This is the new normal for businesses. And responding to these new operating models, these new challenges, these new risks, these new economic pressures, well, it's been a whirlwind for most of you. First and foremost, you had to keep your employees safe, to get them out of harm's way. Then you had to arrange for employees to work from home. You had to close your offices. You had to turn your processes and your procedures upside down. And then your employees had to begin adapting to the new normal. Well, where we are today is that now it's time to start thinking about how we're going to return to growth. And many businesses have already begun to rethink the way they pay their suppliers. Before the pandemic, 41% of IOFM members made at least half of their payments to suppliers via a paper check. The smaller your business, the higher the percentage of check payments you were likely to make. Since the start of the pandemic, the percentage of businesses that make at least half of their payments by check, it's declined by 7 percentage points. And if you think that's impressive, consider this. Before the pandemic, none of the IOFM members we surveyed made all of their payments electronically. In other words, at least some of their supplier payments were made with a paper check. But since the pandemic started, 3% of IOFM members now pay all of their suppliers electronically. We've accomplished more in the past 5 months in moving away from paper checks than we accomplished in the past several years. And that's really saying something. There's no question that some businesses had no choice but to migrate to electronic payments during the pandemic. In many cases, it just wasn't safe for employees to come into the office to cut checks. But you know what? There's a lot of other reasons that businesses were migrating to electronic payments long before the pandemic, and it only picked up momentum during the pandemic. Compared to paper checks, electronic payments are cheaper. They're less risky. They're easier for suppliers to process, and they're faster to settle. But the most compelling reason to automate payments to suppliers is that it helps businesses of all sizes thrive in this new reality. And today, Derek and I are going to share 4 strategies for helping your business do just that. But first, it's time for our next poll question, which is about to be displayed on your screen. This time we want to know, how has COVID-19 impacted your accounts payable department's operations? Is it that all of your staff is currently working remotely? Is it that most of your staff is currently working remotely? Is it that all of your staff were working remotely, but you're back in the office? Or is it that your staff never had to work remotely? Take a moment to respond to the poll question now displayed on your screen. And we're going to discuss the results in just a moment. So Derek, tell me, where is it that these manual and semi-automated AP processes fall down when it comes to this new work-from-home environment?
Certainly, it's the controls around getting approvals, managing. It goes back to, I think a lot of companies were still struggling with just being paperless at some point. Now we are actually officeless. So paperless is out the window. We need to be in a state where I think there are companies that are planning to never go back to work in the same way. And, you look at Facebook and Google and those guys are already talking about allowing their employees to work from home permanently, and that's going to be the new trend. So this is not like a blip. This is reality coming. So we have to contend with that.
We asked our attendees, how has COVID-19 impacted the way their accounts payable department operates? 40% of you on the line say all of your staff are currently working remotely. Another 40% of you say most of your staff are working remotely, and 9% of you say your staff has returned to the office. So as promised, we're going to arm you with 4 strategies for your organization to thrive in this new reality. And the first strategy is to optimize work from home. As Derek just said, there's no telling when organizations are going to bring back their accounts payable teams to the office, or whether they're going to bring you back at all. Most finance departments, we made a smooth transition to work from home during the pandemic. And this is no surprise when you consider that most finance departments have some sort of cloud-based systems or on-premise systems that can be accessed remotely through a virtual private network, VPN, one of those acronyms we didn't pay too much attention to just 6 months ago. But moving forward, we're going to see that work from home is going to be something that we not only need to do, but we need to optimize. Moving forward, employees may be asked to work remotely to ensure social distancing. The success of work from home during the pandemic also may embolden some organizations to offer more flexible work arrangements to employees. There's been some notable cases of Silicon Valley companies that had a real change of heart when it came to work from home since they've seen how it operates during the pandemic. And more organizations are likely to offer remote work arrangements to recruit new talent into the finance department, a big challenge for organizations over the past several years. And over time, some businesses, as Derek said, may downsize their office space because of the success of remote work environments. The challenge for finance departments is going to be to use the lessons learned from their work from home experience during the pandemic to achieve sustainable results during this new normal, this new reality. Only 66% of businesses surveyed by AFP believe their finance and accounting team has the flexibility they need to be effective in this kind of environment. Fewer businesses have the operating structure they need. And let's face it, the approaches to paying suppliers that many of us have taken during the pandemic, working longer hours, routing invoices for approval via email, and putting workers in harm's way to open mail and print checks, well, none of that's going to be sustainable in the long haul. So what we need is optimize these arrangements. We need automation. Automation optimizes work from home arrangements. Digital workflows, well, they don't require staff to be in the office to receive or approve invoices. Staff can electronically collaborate with suppliers and even internal stakeholders to resolve exceptions. Online portals allows suppliers to submit invoices electronically to securely provide contact information and banking details and check on the status of invoices and payments, reducing all those calls from suppliers. Built-in governance controls, well, this is going to allow for control and accountability no matter where staff work. And unified real-time visibility enables you to manage operations across multiple geographies and business units, whether that's across town or across the world. And that brings us to our next poll question, which is about to be displayed on your screen. This time we want to know, which of the following working capital management strategies does your organization currently use? Check all that apply. Are you taking advantage of early payment discounts? Are you doing dynamic discounting of approved invoices? Are you doing supply chain financing? Are you earning cashback rebates on virtual card spend? Are you extending your standard payment terms to free up cash for the organization? Or are you using predictive analytics of cash flow? Take a moment to respond to the poll question now displayed on your screen. I will discuss the results in just a moment. One of the most tantalizing working capital tools that organizations can use during these tough economic times, Derek, is supply chain financing. Tell us a little bit about how that works and why it's so darn important in these tough times.
Well, you really don't want to get in a situation where you're creating a cascade effect against your suppliers, right? If you're paying them late, they'll have to pay their suppliers late, and then pretty much everybody is ticked off at that point. With supply chain financing, you're taking some amount of risk. You're using a third party to take some of that risk to pay that invoice and get it paid sooner. In some cases, much earlier than the due date. And so that relieves the supplier from having to completely blow up their budget and blow up their cash flow. So it gives you a lot of opportunity to kind of be flexible. It can also maybe be used as a way to extend the standard payment terms. So going from net 30 to net 45, net 60, it softens the blow for a lot of the suppliers to be able to do that.
We asked our attendees which of the following working capital management strategies they're currently employing. 53% of attendees on the line said they're extending their standard payment terms. 47% said they're either taking advantage of early payment discounts or earning cash back rebates on card spend. 29% of our attendees are using predictive analytics for cash flow. Any of this surprise you, Derek?
No, I think everybody wants to move up their supplier payment terms, but again, you don't want to create a cascade effect against your suppliers. They might want to move on from you if that's the case. So it's a tentative time right now. So if you can be nicer about extending payment terms, I think that's a great way to go.
And that brings us to our second strategy for thriving in this new environment. Deploy smart cash controls. Navigating the economic fallout of the pandemic requires organizations to manage their cash flows efficiently to minimize those working capital risks. Businesses are going to count on AP to assist with managing liquidity, understanding their cash flow and spend options, and modeling cash flow needs based on real-time and historical data. Many businesses are going to make cash forecasts a key part of their reporting in the coming quarters, and providing timely and insightful analysis and forecasts. Well, this is going to be hard for many AP departments. The root of the problem is that only 66% of you have the planning systems and analytics tools you need. Another reason that many AP departments struggle to deliver insights is that they rely on spreadsheets. 40% of IOFM members use spreadsheets for their reporting, those relics of the 1980s. The problem is spreadsheets are hard to manipulate. Information has to be manually downloaded from multiple non-integrated sources. And it takes so darn long to create a spreadsheet that the information becomes outdated the moment you hit save. So what you want to do is you want to use automation. Automation puts cash controls at your fingertips. Real-time data around crucial business metrics can inform and accelerate your decision-making. Finance leaders can leverage AP data to quickly model financial plans to reflect changing scenarios in the economy. Real-time visibility into all supplier expenses that helps senior management stay on top of costs. Payment terms can be rationalized to free up cash for investments, to pay down debt, to avoid costly borrowing. Supply chain financing, that can enable suppliers to get paid faster without negatively impacting the buyer's balance sheet. All of this is possible in a manual or semi-automated environment. One key to all this is leveraging payment terms. So happy to see so many of you are looking at your standard payment terms. Freeing up cash is critical during an economic downturn. Businesses need to pay off that debt, to reduce the borrowing, to make investments. And electronic payments can help a business do just that. Adjusting your payment terms is also a great incentive for suppliers to accept electronic payments. Suppliers willing to accept electronic payments, well, you give them shorter payment terms than suppliers that insist on receiving paper checks. And when you adjust your payment terms in this manner, it's a proven way to migrate suppliers to more desirable payment methods. And an easy way to do this is to coordinate it all into your purchasing process. Put the discussion on the front end of an engagement with a supplier. And one benefit of extending your payment terms is that it opens the door to more early payment discount opportunities. 80% of suppliers are willing to exchange a discount on the amount due on an invoice for an earlier payment. And there's going to be times when it doesn't make sense to use your own cash for this. And that's where supply chain financing comes in. You can see that with early payment discounts and the revenue share from supply chain financing, you can really start to move the needle in making accounts payable a more strategic partner to the business. Now, if you find these types of working capital benefits that I just described compelling, you're not alone. More businesses are recognizing the strategic impact that payments automation can have on their business. 57% of businesses expect to earn more card rebates within the next 3 years. 52% of businesses expect to capture more early payment discounts in the next several years. 34% of businesses want to extend their standard payment terms. And this is something I think you're going to see over the next few quarters as businesses try to smooth out their cash flow because of the economy. All of these statistics are from IOFM's Future of Accounts Payable study, and they paint a very different picture for AP than the one we normally associate the function with. It positions AP as being digital, data-driven, and strategic. And that brings us to our fourth poll question, which is about to be displayed on your screen. We want to know, how would you describe your organization's current level of automation in its accounts payable processes? Is it that your accounts payable process is fully automated with few or no manual processes? Is it that your AP process is largely automated, but you're in the process of automating further? Is it that your AP process is largely automated, but you have no plans to automate further? Is it that your AP process is not very automated, but you plan to automate more during the next year? Or is it that your AP process is not very automated and you have no plans to automate further? Take a moment to respond to the poll question now displayed on your screen, and we'll discuss the results in just a moment. So, Derek, the question a lot of folks might be having is, yeah, I agree. Automation is a great tool for navigating times like this, but will I ever be able to get senior management to sign off on it? How about it, Derek? Is senior management receptive to automation right now?
I think absolutely. They are looking for avenues to begin to control their processes and costs. It's actually a great time to invest in technology versus headcount. And so it's prime for your CFOs and head controllers to really jump in and be on board. AP automation has always been considered, it's invoice processing, but as you've outlined, there's so much more to it, from the payments, making payments, reconciling the payments, finding strategies for early payments. So that's all rolling together as one cohesive process now versus a lot of spread out stagnant processes.
Get a load of this, Derek. We asked our attendees how they would describe their current level of automation. While only 9% of our attendees say they're fully automated, 60% of the folks on the line today say that they plan to automate their operations further during the next year. In fact, 30% of you who say you're largely automated, you have plans to automate further. Does this surprise you, Derek?
I don't think so. I think people want to get out of the business of handling invoices and making payments.
Amen. Finally, long overdue. And that brings us to our third strategy for thriving in the new reality. Modernize accounts payable. The hard lessons learned during the pandemic are going to be the impetus, and in some cases, the business case for organizations to move forward with accounts payable automation. I've heard it for years. We have proposals that just get stuck in the mud. We can never get sign off on this. Times are a-changing. Many organizations struggled to pay invoices on time during the pandemic because of difficulties in adapting these manual and semi-automated processes to this remote work environment we're all in. Organizations experienced a spike in supplier increase, and that was hard to respond to. And many organizations fear that we're going to see more fraud because of these disrupted operations. And let's face it, There's a lot of interdependent tasks that go into getting suppliers paid. You need to onboard suppliers to keep the vendor master file up to date. You need to stay in compliance with tax regulations. You need to keep track of approvals for invoices. You need to deal with currency conversion for global payments. You need to communicate with suppliers about payment status. You need to reconcile payments. The list goes on and on. AP isn't just about paying the bills, if it ever was. It is about all of these processes together that are often done manually or semi-automated with siloed, fragmented, outdated technology. And all of this is inefficient. All of this is risky. All of this is a burden on our staff's time. 71% of IOFM members tell us they plan to automate their accounts payable function further in 2020. Even those organizations that are largely automated, just like in today's poll question, plan to deploy more technology. Only 6% of IOFM members have thrown in the towel and say that they're not going to budge from their manual AP existence. Don't be these people. You need to keep up with your competitors. And the fact is that automation can't get here soon enough when it comes to supplier payments. While consumers have largely ditched paper checks in favor of alternative electronic methods, checks still represent a whole lot of B2B payments. 81% of AP departments say they still make some portion of their supplier payments using a paper check. And what's surprising to me is just how dissatisfied businesses are with all those paper checks. Compared to other methods of payment, paper checks rank 8th in satisfaction. You heard me right, 8th in satisfaction, ahead of only cryptocurrency. And who knows what the heck that is? Interestingly, newer payment methods, same-day ACH, e-payables, well, they enjoy a much higher level of satisfaction than paper checks. So we don't like paper checks a whole lot, but we keep using them. And one reason we don't like paper checks is that they're so darn expensive. Studies show that it costs $5.95 on average to pay a supplier with a paper check. This includes the considerable cost of check stock and postage and envelopes and wasted employee time and monthly maintenance fees. And when you consider all the time that you spend chasing down check information, the money spent on bank fees to replace lost checks, and the losses associated with check fraud, well, come on now. The real cost of paying suppliers with paper checks is a whole lot higher. Maybe that's why paper checks are so low on the totem pole of satisfaction. And the fact is, folks, nobody has the time for all these manual steps associated with paying suppliers with paper checks. Across the accounts payable lifecycle, AP professionals are bogged down with lots and lots of manual processes. And all the while, we're trying to comply with dozens of business rules and best practices and regulations and auditor guidelines for how we ought to be paying our suppliers. This is a big burden at a time when everything is turned upside down. 84% of the typical accounts practitioner's time is spent on manual processes such as those listed on this slide. That leaves precious little time for value-added activities, the kinds of things that we actually enjoy doing. In fact, AP managers, you know, the boss, well, they're spending more time on transaction processing than on managerial tasks. That's according to IOFM benchmarking data. No wonder we have this perception that AP is a tactical back office function that drains company resources. Well, if you can modernize AP, if you can automate the process, now staff only need to intervene when absolutely necessary. The result? Well, it's a process that can scale along with your business no matter how we work. Accounts payable must automate the way it operates to eliminate manual tasks. It must modernize. Now, I know CFOs might argue that now is the time to invest in liquidity and cash flow and not in automation. But the right AP software can deliver productivity improvements while strengthening those cash and working capital controls. And modern AP systems, well, they can be up and running with little effort and little upfront cost. This is why many organizations are plowing ahead with automation despite the economy. A modern AP department, it looks nothing like the one you may be accustomed to. You've got a cloud-based architecture. You have digital approval workflows. You have on-demand onboarding. You have a consolidated financial view, and you have real-time integrations. This is how AP should work. Best-in-class AP departments, they've already taken steps to modernize their operations. Modernizing AP frees up your staff to focus on what matters most. 64% of AP departments are trying to invest and grow to reposition themselves after the pandemic. Modernization helps you do that. And one other way that you can help your business thrive is to reduce operational risk. The possibility of fraud and compliance risks are heightened when operations are disrupted, and manual and semi-automated invoice approval processes undoubtedly raise the level of risk. Email routing is not secure. There's no segregation of duties. There's no chain of custody assurance. There's no tracking of actions taken on an invoice. There's no ready access to audit information. And document images and data, they can be deleted ahead of deadlines, even by well-intentioned employees. With payments fraud already at an all-time high, you can't afford these risks. That's a big reason that businesses rank traceability as their top priority in this new era of payments. That's really interesting to me because it comes ahead of hot button issues such as ease of reconciliation and cost and even speed. We hear a lot about faster payments. What businesses want are more secure payments too. And mitigating risk starts with instituting strong financial controls that help prevent fraud and risk. Regularly evaluating financial processes, well, that'll help you uncover potential vulnerabilities. But automation helps you maintain control. You need things like multi-factor authentication and IP restrictions, data protection and encryption, role-based security and audit trails, complete segregation of duties, and redundancy, disaster recovery, and data backups. You want to have an environment where OFAC sanction checking is done automatically. You want to verify that a supplier is payable. In the past, screening vendors for anti-money laundering compliance, well, it's largely been an afterthought in many of our businesses, but the growing reliance on digital supplier relationships is starting to have an impact here. So you want to have the ability to check that your suppliers are payable. The message we want to leave you with today is that accounts payable can play a big role in helping the business thrive in this tough economy. But accounts payable is going to have to rethink the way it operates while reducing its underlying cost structure. The perception of accounts payable already was starting to change within businesses before the pandemic. Most businesses now see accounts payable as being very or exceptionally valuable to the business. This is a far cry from the long-held perception that AP is a tactical back office function. But contributing to business growth is going to require accounts payable leaders to find ways to ensure that work from home productivity is optimized, to apply smart cash flow controls, to modernize processes, to mitigate risks. And automation makes this happen in the short term while setting the organization up for long-term success. New ways of working, new operational challenges, new risks, new economic pressures. In this reality, Surviving? Well, yeah, it might seem like a reasonable goal, but your business expects more from you and it expects more from your function. In some ways, it's counting on you. It needs you more than ever in order to thrive. And that's what a modern accounts payable function helps you do. With a modern AP function, you can scale faster, you can increase cash flow, you can extend DPO without impacting existing payment terms, you can lower your cost of goods and services purchased, and you can strengthen your supply chain. But don't take my word for it. Derek's going to show you how Tipalti is helping businesses create this modern accounts payable environment. Derek?
Thanks, Mark, and thank you all for attending. A little bit more about myself and what Tipalti does, because it's very relevant to what Mark's been discussing. I've been at Tipalti for over 5 years, and full disclosure, I'm not a finance person, but I've been on the marketing side for technology companies for longer than I haven't. And it's always the same story. It's some manual process that needs solving or the need to take the business to the next level. It's always been the case for marketing departments, sales teams, IT, support, engineering, virtually every other department in a company. But what's unique about our era is that finance organization, the finance organization, is finally getting a little bit of that technology love. Especially today when we're all working from home and the paperless back office is no longer a wish but a necessity. So technology that can modernize finance operations, that advances beyond solving one or two AP pain points to addressing the entire holistic payables process, that's really the goal for strategic, high velocity, modern finance teams. Next slide, please. And at Tipalti, we work with over 1,000 companies. Many are likely brands you recognize, and proudly these customers stick with us at a very high retention rate. And that to me indicates we're really important to them at an infrastructure level, like an ERP or even those spreadsheets. They rely on us. CFOs and controllers essentially have exchanged those bank fobs that you get for wiring and making payments for software that actually lets them pay thousands of suppliers worldwide in a matter of clicks. And it's all done securely, accurately, in a very auditable way that you can reconcile back into that ERP. One other thing about Tipalti customers, they bring us in when there's an immediate need and when also addressing the future. So 6 months, 12 months, 2 years. Even in a pandemic, businesses have to keep looking ahead. They might be expanding internationally, increasing the pace of their business, or just needing more robust financial controls to protect against payables risk. And one last point, is there a finance leader out there who's not looking to optimize their headcount? Finance has to set an example for the organization around efficiency and accuracy. So do they choose to spend that headcount on someone at an analyst level who can help them long term with planning and spend management, or do they use that headcount to hire an AP clerk to key in invoices, get approvals, and make payment runs? Tipalti solves today's payables challenges today, but readies you for tomorrow. And with the 80% of workload we save companies, the integrated best practices around tax and regulatory and fraud detection compliance, and the faster financial close we enable are all about anchoring that success. And because we see the entire payment process, the entire supplier process as a whole, we're able to do that. So definitely thank you for your time. I'll hand it back to Mark.
And we have a number of questions from attendees. If you haven't done so already, I encourage you to use the chat tool on your screen to send us your questions. Or if you have another question you'd like to submit, go ahead and send them to us now. So our first question from an attendee, Derek, is what are you seeing with payment terms? Our CFO wants to extend our payment terms. What's reasonable?
It depends on the industry. Certain industries, if they're used to working in a very digital environment, we're still seeing net 15, net 7 sometimes in some cases. But as you get into the more kind of brick and mortar type businesses, more suppliers that are more traditional, it's not unheard of to see net 60.
Are you seeing more demand from suppliers for supply chain financing, or are they looking for other ways to accelerate their cash flow?
If it's heavily integrated, what you don't want to get into a situation with is you have a lot of suppliers, and now you're managing these independent deals that you're working through. You don't want your new job to suddenly be negotiating with suppliers, right? So can you do it at scale? Can you do it en masse with your entire supplier base? Or is this a one-off, two-off for some of your preferred partners, if you will?
Margaret wants to know how big a burden on the IT department is deploying a solution like this.
It depends on your organization. Every organization is different. What we've seen is an implementation can go anywhere from a week to several months, depending on how complex it is. But the idea is to not involve IT, honestly. The more holistic the solution, the fewer plugs that you have to account for. And, it's all for IT, it's really about, is it secure? Is it auditable? Is it on a trustworthy, reliable platform? Is it going to be available 24/7? And, if you meet that criteria, you're going to do fine, honestly.
Hope writes in, my organization is really struggling with supplier onboarding in our work from home arrangement. How does this type of a solution automate that process?
That is that is our sweet spot. Honestly, if you were to pay me for our secret sauce, I would let you know that part of the reason I think companies pay in check is because it's easy. They get an invoice, they look at the amount, they see the address, and it's off to the races with the check. But that's kind of defeats the purpose of what we're talking about, which is if you properly onboard, you will allow your supplier to make the choice. Do I want to be paid in a check? Or actually, can the supplier be a part of that process where they say, actually, I would prefer wire, or I would prefer an ACH payment, and here's my bank data, and I will put it in because it matters to me to do so. And when you do that, you can layer on a few other carrots for the supplier, which are, the supplier could get access to payment status. The supplier can update their payment methods whenever they want to. The supplier can submit their tax forms and get it validated when they want to, and make it all part of a cohesive membership into this payment process. And in doing so, you're also collecting all their contact information. You can automate emails back and forth to them. You can be more proactive as a buyer when you have a supplier who's willing to input that information.
Jennifer writes in, why should I use a vendor like Topalti instead of my bank?
Honestly, it's about flexibility and control. Your bank is not designed to handle payments to lots of different countries. Your bank is not able to provide a cohesive data set that comes back from them when you are trying to settle your payments. It's much easier when you have a point of control. The other thing is, if you are making payments on your bank portals, somebody has to take ownership of that. So oftentimes it ends up to be the CFO. Mm-hmm. So they end up having to log in to the bank and type in the wire information or type in the bank information for the payee. And you want to get out of that process. That's not auditable, by the way. You can audit it, but it's not necessarily a direct auditable process in which you can go back and report that into like your ERP.
Christine writes in, there are a lot of accounts payable automation solutions out there. Any advice for evaluating them to make sure I get the right one?
It's always going to be about fit. Um, what we really try and let our prospects know is where we excel is around the holistic process from the onboarding standpoint, the invoice processing and approval cycle, the PO matching cycle, the payment cycle, and then ultimately getting that information for reconciliation. That's our sweet spot, as well as being fairly global, being able to pay to 190 different countries. But every company's different. If you're smaller, you might go with something kind of more simple and can allow you to do certain payments that way. But if you have a kind of growth mindset, you have to plan not just for now, but for what are you going to look like in 12 months? What are you going to look like in 2 years? Because you don't want to get into a situation where you're constantly extracting your foundational AP process.
Our last question was from Christine. This one is from Christina. She wants to know, many of our suppliers are ACH or direct debit, but we do have several wanting only check payments. How do you deal with these suppliers?
If that's what they want, and that there's several ways to do this. Our platform allows you to assess a fee based on payment method. So you could say, okay, well, we'll give you a check. That's what you want, but we're going to actually charge you the $5.85 that it costs us to issue that check. You can do things like that on our platform where you have some controls there and mitigate those people from choosing more inefficient payment methods and encourage them, entice them into something simpler. ACH, for example, is great.
Tony wants to know more about how you can help ensure employee productivity as they work from home. How does this solution keep your employees efficient, Derek?
Well, everything is audited. Everything is upfront. You can see where everybody is, who's making approvals to transactions, who's approving certain invoices. And this is company-wide, so it's like your buyers internally within the company are involved in approving invoices for their vendors directly versus in a situation where maybe you are having to email a lot of information from invoices that might come in. So you're putting the process to work. In terms of productivity around the actual AP side, I don't know. I think any software would be able to handle that from an auditability standpoint.
Robert wants to know more about your watch list checking. Do you only check for OFAC or do you check for other lists?
There are built-in heuristics within our platform that check for OFAC that have access to other blacklists within the world. So I think Great Britain has one, the EU has one. So we are testing those. And then also we check on things like, is the supplier registered multiple times? And if so, are they using different bank accounts? That's an indicator of possible money laundering. So we'll flag payees that feel suspicious to us, just from the standpoint of it looks like activity that's not correct. The other thing we might do is if you've been paying somebody small amounts for a long time and then all of a sudden the amount jumps, that's a potential flag on our side as well.
One last question from me. We know from our poll question results that 60% of the folks on the line plan to automate further this year. What's the single biggest piece of advice you'd give them, Derek?
Do your homework, talk to the vendors, and remember that the goal is not to solve for 2020. You're solving for 2021, 2022. You're solving for your future. Yes, there could be pain right now, which you want to alleviate, but ultimately it's still going to be about growth and the velocity of your company.
Derek, thank you so much for sharing your insights with us today, and thank you all for taking time out of your busy day to join us. And with that, I'm going to hand it back to Laura. Ms. Laura.
Thank you, Derek, and thank you, Mark, for a great webinar today. I have a few housekeeping notes before we officially close out. Just a reminder, if you could please fill out the short evaluation form that will appear once you close out of the webinar window. This will help us better serve your needs in future webinars. As a reminder, the on-demand materials will be emailed to everyone within 3 business days. This will include a PDF of the slides as well as a link to the recording of today's presentation. I want to thank you again to Derek and Mark for a great presentation, and thank you to all of our attendees for taking the time out of your busy day to join us. This webinar was brought to you by IOFM and sponsored by Tipalti. Thank you all and have a great rest of your day.